I get started here. I treat him like my dad. Of course, he's a lot older than me, and I have to. Uh, like to call the meeting to order, and Madam Secretary, will you please call the roll?
Senator Rocky Adams, Senator Douglas,
Here.
Senator Howell, Senator Neal, Senator Schickel, Senator Smith, Senator Storm, Senator Turner, Senator Yates, Vice Chair Girdler,
Here.
or Chair Girdler, sorry, and Senator Carpenter.
Any members that got any communications or announcements for guests or anything like that? All right. First on the agenda is Representative Weber, and I think he's bringing his priest with him. Will y'all, yeah. Will y'all announce yourself? And you don't need to tell us who you're with, Brother Nemus. But anyway, go ahead.
Russell Weber, State Representative, 26th House District.
Senator Mike Nemus, District 38.
You may proceed.
Mr. Chairman, members of the committee, House Bill 148 is an assignment of benefits for substance use disorder and mental health treatment centers. Currently, for out-of-network providers, many health insurance companies will not send payments for the services rendered to the patient insured directly to the provider, but instead funds are paid directly to the patients and the insured. The expectation is that they will in turn pay their bills. This is because many of these insurers have anti-assignment clauses as part of their contract, so even if the patient or the insured instructs the insurance company to pay the provider directly, it won't be honored. This pay-to-patient model for out-of-network models has been outlawed in 17 states for healthcare, and another 7 states have specified provider carve-outs that bans this practice. So what does House Bill 148 do? It requires health insurance companies to recognize a patient's assignment of benefits for substance abuse and mental health facilities only. Under this proposed bill, patients of a substance abuse or mental health facility will be allowed to instruct their insurance to assign and pay benefits directly to their treatment provider of choice. Due to the nature of substance abuse and mental health disorders and the severity of the drug epidemic our state continues to face daily, we believe the carve-out of these providers in House Bill 148 is necessary. Providing access to such funds to these vulnerable individuals has and will continue to lead to a relapse, overdose, or even death. I do not believe this is a good public policy for our Commonwealth to allow very large checks to end up in the hands of someone in recovery. House Bill 148 specifically addresses that problem. I would add that House Bill 148 does not apply to Medicaid or Medicare. There was a committee sub that was attached in the House, and I'll outline what some of that does here. The committee substitute to House Bill 148 is the work product of discussions and negotiations between Anthem and the substance use disorder treatment provider community. The parties have agreed to the language in House Bill 148. It does not make any substantive changes to the underlying bill. It simply provides some additional safeguards in the assignment of benefit process between the provider, the insured, and the insurance company. Some of these requirements include submission of a more detailed statement of the SUD or mental health provider to the insured about the charges and AOB process they will face, a time frame when the AOB claims can be submitted to the insurance company. SUD and mental health providers must maintain claim records, and providers must respond to inquiries regarding the AOB benefits by investigative units, and this investigation would deal more with fraud. It also includes a provision to protect against potentially bad actors and promote quality providers by requiring SUD and mental health facilities to follow their applicable recognized standard of care. And that's an outline of the bill, Mr. Right. Chairman and members of the committee.
We do have some questions, so we'll allow them. Senator Smith?
Yes, if I do. If the sponsor would allow me to ask a quick question. Is this basically like is self-determination? Is this a case where a patient would be able to select some level of care for it and then have the money follow some of these suggestions, or Is that what this is getting into?
So the structure is, and this was brought to me by a recovery facility in Bullitt County that Senator Nemus and I represent. And what happened is those individuals are going through about a 30-day treatment program, and they are receiving the checks, payment that should go to the facility for the service. And what's happening is that check is going directly to that individual in recovery.
Well, let me say, Representative Weber went in detail pretty good. I know he said it was a summary of what the bill does, but let me bring it succinctly down to a layperson's understanding. There are people getting checks that need services and they're walking away with the checks without getting the help they need.
Yeah, just to close, yeah, that's different. There was a bill, self-determination, that we had some years ago that actually was a cost-saving measure, and I was making sure this didn't somehow undo that. Sounds like a good bill. Thank you.
Senator Douglas?
Thank you, Mr. Chairman. May I ask 2 questions?
Yes.
Thank you. 148, just in my review, is really a shift from who does the collections. Because as you're stating, someone receives a service and the one receiving the service receives a check and is supposed to give that to the facility who treated them. Help me out with this. In this particular bill, what we're saying is that when that patient receives a service, the facility must, the insurance company must directly pay the facility and not to the patient. Because traditionally, there are patients who are walking away with the money. So first and foremost, this is kind of a collection shifting piece of legislation. The other question I had was with the out-of-network charges. Are the facilities that are out-of-network going to charge the same as those facilities that are in-network? Is there? I didn't see that in here. Is that part of the agreement?
Hold on, I'm going to get someone who's more
Okay.
versed in
Traditionally,
the
what
insurance.
happens is out-of-network
It's less.
pays. If you're out-of-network, the out-of-network people will charge more. The people in-network will charge less. So my question is, if this legislation is going to force those providers to go ahead and pay for this facility, isn't it going to cost them more? Because it's out of network.
I'll introduce myself for the record. Jeff Busick, partner at McCarthy Strategic Solutions, contract lobbyist, and work for the center that they're talking about, Robert Alexander Center, there in Bullitt County. You and I had a conversation earlier today about this topic, and I, talked to my client, and he informed me that at least in the substance use disorder arena, right, that the out-of-network rate for fully insured plans is only about 1%, maybe 2% higher than the in-network rate. That might be different, for different providers. Like, I'm not privy to different rates of in-network and out-network for all different type of provider groups. But they don't see that there will be this sort of incentive for providers to, if they are already in network with an insurance company, to go out of network, because the financial incentive isn't that big. And there's also additional reasons for providers to be in network with an insurance company, such as, that they want the insured or the patients, the clientele, right? They want that wider range of patients, and that's why they're in network. It's not just about rates necessarily in network. So we don't think that that you're going to see a mass exodus of people leaving, right? At least of how we narrowly tailored this. But that the rate may be a little higher, right? And I think it depends on what the insurance company is. But so the rate will be whatever the out-of-network rate is that the insurance company has agreed to with their insured.
May I ask one more question,
Yeah.
Mr. Chair? Thank you. As a provider, for longer than I care to say here, I have concerns, and I shared those with you this morning. And my concerns are that there is no reason to be an in-network provider if you're going to be getting, let's say it's only 2% more. If you're going to be getting 2% more by being out of network, there is no incentive to be an in-network provider. None. Because the paperwork is often the same, or if not less onerous, for out of network than in network. And I just want to.
Sorry, and like we talked about, I understand your concerns, right? I do. We think that, like as I just mentioned before, we think that there are other reasons to be in network. A provider goes in network for other reasons than just the rate. Now, the rate probably is obviously a big reason. I don't disagree with you there, but I think there are other reasons to be in network besides just the rate.
All that is really, really good. I'm sorry, Mr. Chair.
Go ahead.
All of that is wonderful if you still got people who are in network. But my concern, and I'm just expressing a concern, is that if there is no reason to be in network, and most providers are in network because there is some benefit, and usually that benefit is you have access to a larger population of patients. If no one stays in network, that benefit goes away. That's just the cost of doing business. I just want to share that concern. Thank you, Mr. Chair.
Let me ask you this, John. If it's in network, they pay in network price, all right?
That's correct.
If it's out of network, they still pay in network price, and there's going to be a difference in billing. Are you saying that the bill will allow them to pay the out of network price, whether it's 2% or 20%?
So they'll continue to pay what the out of network rate is, right? All this bill does is it requires the insurance company to recognize an assignment of benefit from the patient. Because most insurance contracts, if you're out of network for the insured side, has anti-assignment clauses. And so all this bill will do is requires them to recognize that assignment of benefit.
So the
So
bill,
it does nothing about changes the rates.
all right. So the bill does an assignment. That's what this bill says, an assignment.
That's right.
You're only assigning what that insurer pays.
That's right.
If that insurer pays, if the bill is $12,000, but they only pay $8,000, they're going to assign the $8,000. This don't raise the price of in or out of network. They're going to
correct.
pay what they normally pay.
That's correct.
So in his situation, and I know his concerns, and I would be concerned too, there would be no reason to be in network or out of network, but they're only going to pay what they pay for in network, and then the patient is going to pay a surprise billing. It's going to have that difference of billing because it's out of network compared to in network. But the bill only just says that you can do an assignment, right?
That's
Yes.
correct.
And that's the same as if a patient goes to an out-of-network place, they get the money, and if they don't run off with the money and pay, they still owe more than
Right.
what they were paid from it. So it doesn't change the amounts paid. They can still decide to go to an in-network facility, whether they get paid directly or the facility gets paid.
Well, I think if I understand what he was asking, the insurance company is not going to pay an out of network price higher because they're out of network. They're going to pay an in network price, and then if it's 40% higher, then that insurance company is going to pay that less the 40%.
Yes.
So it's going to be what we call a surprise billing because it's going to be out of network.
And
So-
that's no different than if
Right.
if it was paid directly to them or to the facility.
And so that is it. All right. We have a motion. All right, got any more questions? All right, we have a motion, first and second. Do I? Yeah. Madam Secretary, please call the roll.
Senator Rocky Adams, Senator Douglas,
I vote aye, but I'd like to explain my vote, Mr. Chair.
Go ahead.
I vote aye because I think patients ought to have the access. but I will be keeping an eye on this to ensure that the carriers are not getting a raw deal by being assigned and having to pay a lot more simply because a patient decides to go to someplace that's out of network. That's important to me. I want to be fair across the board and make sure that what we're talking about today is exactly what's occurring. Thank you, Mr. Chair.
Chair Girdler,
Aye.
Senator Howell, Senator Neal, Senator Schickel, Senator Smith, Senator Storm, Senator Turner, Senator Yates, Senator Carpenter.
Look like it passes very favorably. I got a quick question for my good doctor, and then I'm gonna see if we can go on consent. Dr. Douglas, is this all right to go on consent, and you can watch it after it passes, or do you want to say something on the floor about it?
No, sir, Mr. Chair. I think consent would be fine.
Got a second. All in favor say aye. Aye. Any opposed? Representative Weber?
Thank you all.
On consent.
Thank you, Mr. Chairman. Thank you,
Thank you.
Senators.
All right. Representative Flannery, House Bill 170. And if you have anybody coming up with you, I guess you're going to go it alone. You're solo. All right. You may introduce yourself and proceed.
State Representative Patrick Flannery of the 96th District. I have before you all today House Bill 170. It primarily deals with cancer fertility preservation. As many of you all may know, chemotherapy and radiation can have a negative impact on one's fertility. What you may not know is that currently health plans, health coverage does not cover fertility preservation services for those patients. This bill aims to remedy that situation.
Motion on the bill.
Got a motion? She's got a second. Senator Stivers, his buddy, Storm. Senator Rocky Adams was the first. Any questions? Madam Secretary, please call the roll.
Senator Rocky Adams, Senator Douglas,
Aye.
Chair Girdler,
Aye.
Senator Howell, Senator Neal, Senator Schickel, Senator Smith, Senator Storm, Senator Turner, Senator Yates, Senator Carpenter.
Representative Flannery, this passes very favorably. Got a motion on consent. Senator Rocky Adams. Second, Senator Douglas. All in favor say aye. Aye. Any opposed? Representative Flannery, I think it's cause you're so big they didn't want to fight you, so you got this bill.
I would like to
passed.
think it's a good bill and good policy.
Yes, it
but,
is. It
But
is.
whatever it is, I'll take it.
Thank you. I've got to be real nice to this next guy. He's the House Banking and Insurance. Brother Meredith, would you come forward with your guest? House Bill 429.
Thank you, Mr. Chairman.
You're welcome.
Representative Michael Meredith of the 19th House District.
I'm John Cooper with the Kentucky Bankers Association.
David Wallace with Heritage Bank.
So the bill that you have before you right now is a bill that deals with bank legal lending limits. And I don't know how familiar you all are with that issue, but there are multiple ways to calculate that legal lending limit. There is a federal standard in federal statute. There is a state standard in our statutes. The state standard is for any state chartered bank. The federal standard is for national banks. There is a parity letter that the Department of Financial Institution has had for years that allows a Kentucky state chartered bank to use the federal parity letter if that is more beneficial to them in calculating their legal lending limits. In this bill, we adopt that parity letter into statute so that it's not just something coming from the department, but it's actually in our statute. So you could use the federal or the state by statute now. And it does make one small change to the state legal lending limit as well. So you have an unsecured and a secured limit under the state legal lending limit statute. The unsecured limit, you could technically lend completely unsecured all the way up to that limit. But then after you go over that, you have to secure. In practicality, no bank is doing that in Kentucky that I know of, and I don't think it would be prudent for any bank to do that. They're securing the bulk of the debt that they have, even at the unsecured limit. What this does is it provides the flexibility for banks that if they are secured on that and they go over with some small amount of unsecured debt relative to the total legal lending limits, you have to secure everything over the current unsecured limit. And so what happens in practicality again, you have a $20 million secured limit, you have a $16 million or $14 million unsecured limit. If that person that was over the $14 million amount, or right at the $14 million amount, is fine, completely unsecured, but then there's this donut hole that kind of exists between the two limits, and you can't even offer to pay an overdraft, to give a small unsecured revolving line of credit, to give a credit card to somebody who's one of your best customers if they get above that unsecured limit, because they can't have anything unsecured once they go over that limit. Nothing whatsoever. And this fixes that issue.
Got a motion on the bill? Got a second motion by my good buddy here, and second by Rocky Adams. Any questions? Madam Secretary, we're going to call the roll.
Senator Rocky Adams, Senator Douglas,
Aye.
Chair Girdler,
Aye.
Senator Howell, Senator Neal, Senator Schickel,
I'd like to explain my vote.
Go ahead.
Thank you. I just want to tell you how special it is to have our good friend David Wallace, the pride of Boone County, here at the state capitol.
Senator Smith, Senator Storm,
Aye.
Senator Turner, Senator Yates, Senator Carpenter.
This passes favorably, and would anybody like to motion from John Schickel, second from Rocky Adams? All in favor, say aye.
Aye.
Any opposed? You know my hero is John Schickel. Y'all know that, right? And the reason he's my hero, he knows how to play this game with people like you. So that's the reason he's my hero. Thank you.
Thank you, Mr. Chairman, members of the committee.
Mr. Chairman, members of the committee, thank you for your time and consideration.
Yeah. We can't run Meredith off, so we want Representative Stevenson. This is the last bill we're going to consider.
Well, thank you, Mr. Chair, and thank you, members. House Bill 433 establishes dates for renewal and reinstatement of deferred deposit businesses and check cashing licenses. The Department of Financial Institutions under the Public Protection Cabinet supports this bill as it makes the needed changes to get Kentucky law in line with the nationwide multi-state licensing system, which is the system of record for non-depository financial services licensing or registration in participating states.
Make it a motion.
Got a motion by Senator Yates, second by Senator Rocky Adams. Any questions? Madam Secretary, call the roll.
Senator Rocky Adams, Senator Douglas,
Aye.
Chair Girdler,
Aye.
Senator Howell, Senator Neal, Senator Schickel, Senator Smith, Senator Storm,
Aye.
Senator Turner, Senator Yates,
Aye.
Senator Carpenter.
All right. You make a motion to consent. All right, got a motion, Senator Yates, consent. Got a second by Senator Storm. All in favor say aye.
Aye.
Any opposed?
Thank you.
Thank you.
Yeah.
Thank you, Mr. Chairman.
Thank
we
you,
appreciate you very much.
I appreciate you, Mr. Chairman. Just remember when it says Girdler when I come over in front of you. Thank you.